Okay, today is August 21st, 2014. In this video, I was going to talk about a trade that I just took, on eBay. And let me go back and reconstruct the chart that I posted on Twitter on Tuesday. If for those that have been following, you probably have seen that chart. And essentially, we are talking about having a base here, and we're constructing a channel, a price channel, on this segment of prices. Let me reconstruct that chart. Okay. So we're looking at this price channel, and also we have a baseline here, right? This resistance, and essentially I was looking for a trade bounce of these, this particular inflection point where it's bouncing off two different supporting trend line, right? One is this this baseline here that it broke up here and then came back down, held the support, came back up, and then now it's coming back down here, and also this trend line here on this price channel. So essentially I'm betting on the price will hold above this inflection point and to move back up. And then if you notice on the candle here, here's this inside bar here on Monday, right? You see this engulfing candle here, and I put out a chart on Tuesday to say, essentially waiting for the price to break above this engulfing candle, and that could be a trigger for a swing long, right? So then if you did not take that trade on that particular day, then there's another one which today I posted here, that on Wednesday we got this little bit of an inside candle, and here's a engulfing candle here. So here's another swing long possibility to go in there. Okay, so you got two possibility to initiate this trade. So let's say we go and take this trade here. Let me see. I don't want to do that. Let me do this. So if we were to put the stop right underneath that trend line and change that to a color, so different color, so we kind of be able to differentiate that. And let me extend that out. Okay, so you can see this is your R, right? This is the risk, right? And here is your 1R reward when it get up to this this point here, and this is 2R, 3R, 4R. So we want to know, is this particular trade give us the proper R and R to make it worthwhile, right? Any trade that give us at least two, the potential of giving us two time the reward, time the amount that we risk, then it's worthwhile, right? Okay, so essentially, one way to look at that is, if I were to do a major move on this particular, band here, right? This pattern here, then essentially it brings it up over here on this level, which is close to this pivot point here. Okay, so if you look at it, it's this is 1R, 2R, 3R, so it's approximately 3R, so that's not too bad, right? Okay. Then also the other thing is, let me go and take a look at the closing basis. Let me just nudge that. So here's the pivot, one pivot point, and then we got some more pivot point here. So there's a possibility that we might encounter a resistance up here somewhere. Right? It doesn't mean that every pattern have to trace out that 100% of that major move. It could be anywhere between that 80% to 100%. So this is another possibility where this trade might be terminated, right? Encounter resistance and pull back. So again, we're looking at this. This is still a 2R. So these two level, at least it gives us that possibility of 2 to 3R of return on risking 1R, right? So this is a a tradable trade. Okay. It kind of sounds strange, but yeah. So anyway, let's go back and put the candle back on there. Right. So let me remove some of these lines. And so if we take that, so essentially you could see that the trade, as it turned out, it worked out much better than what I expected. Because when I took this trade, I expected to get up to this level here. At least going to take a few days. Not just a 2 day or something like that, right? Okay, but today, as I was watching, the trade, with the price moving, then all of a sudden it just started to surge. And then the news broke that eBay plan to spin off PayPal in 2015. Then all of a sudden, these things have surged. And of course, you got these breakout people that might be looking at playing the breakout at this pivot. So they came in, right? And then you got these guys coming in, playing this breakout, they came in. But of course, I always, scale out as it get up to a certain level of my profit target, and then let the remaining share run, and then when it get into a certain resistance level and then start seeing some sort of price pullback and that kind of stuff, then I also sort of put in a trail stop to lock in some of the profit. But the other thing, the more important thing is, when somebody give me a gift like this, right? Because I wasn't expecting the price to surge like that. When they give me a gift like that, I'm gonna take it. I'm not going to wait, right? So what? Maybe it will come up here. That'd be another day, because I want to take this, take the money and run. When somebody give me this, this type of opportunity, right? Because you don't get these kind of opportunities that often. Now that's me. So different people might have a different, trading philosophy. But again, even with this, this surge here, I'm still trading according to my plan. It's just that I tighten up my stop much more quicker, right? To take profit, because as it move up, because I'm not going to, just staring here, be greedy looking up at this peak here, or somebody might say that it might worth $70 or something like that, right? So that's not the point here. The point here is that, you could see some of these trading parameters setting up, okay? And here, you can see that there's 2R, 3R possibility, okay? So now, there's a lot of ways to trade this thing. Okay, trading is, it's so diverse. It's all depend, what type of trade that you want to do. Swing trade, trend trading, or day trading. Okay, so but the thing is, you basically all trading with the same defined risk, right? For example, let's say, just if we use a hypothetical example, that each trade that you're gonna make, you are setting it for each trade you're gonna risk. For each R essentially is $1,000. Okay, so you're setting up this trade by, sizing it properly to your position size to risk $1,000. If it fall off, hit your stop, you lose $1,000. When it make up 1R, you make 1,000. You come up here, make 2, 3, and so forth. So that's why when we talk about trading system, trading technique, we don't talk about dollar and cents or percentage. We talk about R, right? Because different people might have different account size, might have different, size for the R. They might be, some people might be trading, risking only $100 for each trade, and some might risking $10,000 or more. So it's all depend on their account size, how big the trade is, right? Okay, so that's why we always talk about R instead of, percentages. Okay, so here we see this trade could realize, 2 to 3R, right? Now then there's another trade here too, right? If we also, go back to this particular trade, let's say, for example, taking this, this breakout trade here earlier, let's say, there's people like to play, trade breakout, which I don't, but, there's nothing wrong with that. It's just that, there's all the individual preference. So let's say the guy take a breakout trade when it get above here, basically enter the trade and possibly maybe take a stop down here, right? So let's set it up and see what kind of, risk and reward that that particular trade might, materialize, right? Okay, so let's extend this out, okay? So again, you can see that here's that 1R, right? So, into the trade here, came up, not close to the 1R, dip back down, take a little heat, right? It didn't hit its stop. So he's still in the trade, and then when he come up here, depending, does he want to, wait until the resistance and start pull back, then he's taking, start trailing his stop to lock in profit, or he's scaling out as it, get above his 1R, and it's, that sort of thing. So it's all depend, but again, he might, on this trade here, it's playing up here, there's a possibility he could exit out that trade right up here, or worse yet is to, take some profit here and exit the trade back at this break even. But never in anybody's right mind is to let this trade come down and take a loss, right? The worst case is, you don't make any money, come down here and take yourself out on a break even, okay? So, but if you wait until it come back down here, that's, it probably will cost you more pain more often than you think you say, see, my stop is good. I voted out, right? You voted out this time, you got lucky, right? But most of the time, you probably will come back down, if continue to come down here. So you don't want to take that chance. At least I don't want to take that chance, but I don't know about you. You might have more guts than I do. But anyway, that's another point. But we could talk about this, so you got this, let's say you got this 1.5 R or something like that, on this particular trade, and you got, and then you got out. So again, then you could basically enter back in the trade that I just described earlier, right? Then you could get into, 2 to 3 R. So you combine on this trade here. So basically, in this little swing here, you could make 3 to 4 R, right? Okay, on these two trades. Okay. So now there's other people that also want to do trend trading because they believe that looking at some of these long trend, that if they held a stock they might have made more money and that kind of stuff. For that particular trade, that's true, but collectively it might not be true. Right? And I'll tell you why. Right? Because you basically you're still risking the same R, right? But you also have a bigger the R is bigger, so you just size your position a little bit more smaller, right? So let's say we take a look at this thing here. Okay, let's take a look at this trade. Let me set this thing up again. So I say we're basically looking at this baseline, and here's this trend line coming down, right? Okay, so you say, hey, this looked like a good place for me to set up a trend trade. Right, so as long as as soon as it break this trend line here, essentially here, then you enter a long, and you basically set your stop here. So now you got this bigger R here. Remember when we were up here, we were talking about this small R, right? But again, this one R, let's say for example, each trade that you're going to do is going to be $1,000, right? So you're probably holding more share here because the R is smaller, versus over here your R is bigger, so you're probably holding less share, right? To collectively, create that $1,000 risk per R, right? So essentially, let's say you got in here once you break this, trend line, and let's say we set it up, okay? So we go below here, then we will go and take that, and let me set this to green and extend this out, okay? So again, let's see what we get, right? So we got 1 R here, okay? Got 2. Got 3, you're waiting for 4, right? And let's say you want to play it up here. Let's say for some reason, that it will get up here and you will get this. So you basically could get 5, right? So again, you basically betting on this particular trend, this whole move, right? Okay, for 1, 2, 3, 4 R, right? Remember we just finished a trade here, 2 trade, right? On this little move, we essentially got the same 4R. So if the R is also, each one is equal to $100 or $1,000, they basically is the same, right? Okay. But the thing is, you basically have to look for something that's developing this big of a trend. Not saying that it's not possible, but the probability of it, is a little bit lower than these type of little bit of a trend. So because again, remember I talk about the expectancy, right? So if you're not familiar with the expectancy, that equation, you might want to look it up and kind of study that a little bit and get an understanding on that. Because that expectancy is, you have this, the percentage of winning trade and the percentage of losing trade, right? And then the amount of win, the amount that you win on each winning trade and the amount that you lose for each losing trade, right? So those are the 4 parameters that you use to play around, to determine what your expectancy is based on your edge, your trading edge, and your trading plan, right? Okay, and those percentages of win versus a loss depending on the type of trade that you're going to do, swing trade versus trend trading versus day trading. Those percentages are all different, right? And same thing with the amount that you try to scalp. For the day trader, it's very small, okay, right? When they lose very small, but when they win pretty big, right? Because they hit multiple R, okay? But when they hit those things, a lot of times that they might get stopped out because the size is so small, the stop is so small that, any kind of volatility will, take them out. Versus on your trend trading, you got a bigger stop, right? So the chances are you might not get stopped out that easily, but the thing is, you might not see this big long trend, that frequently either to give you that 4-5R, right? Okay, so those are the consideration that you would have to look at and get an understanding of it. And again, it's not any preference of one or the other. It's all depend on your comfort zone. But before you dive into any kind of trade that you want to do, is you want to understand the different aspect of them, of these type of trade. And the things that is more important than, it doesn't matter if you want to do trend trading, swing trading, or day trading, or whatever trading you want to be consistent. Pick one type and trade it. You don't want to go and trade, this trade as a trend trade, and that one as a day trade, and this one as a swing trade. It's just like you go in and play a blackjack, go into a blackjack casino and play blackjack. You could sit on the table here. Your plan is that no matter what, each table that I'm going to play, each hand, I'm just going to play the minimum bet size on the table. So you go to a $10 table, and then you go to another table, a $20 table. That's inconsistent. It's just like you're doing swing trade and trend trading, right? Because then now your bet size is different. Okay, even though you get the same odd, okay, or the probability of win and losses, but they're all is different. Okay, so in the long run, you're going to end up losing. But yeah, if you get lucky, maybe on the bigger size, minimum bet table, you might get more luckier, right? I mean, these are all random effect, right? So that's the thing, so I hope I give you a little bit more insight, on, different aspect of trading, as well as, just go through some of the mechanic on, the trade that, that I made on eBay. And hopefully that give you a little bit insight to understand different aspect of trading. Okay, good luck.